Well, I think that the budgetary debate inside European Union is a very complicated discussion, and we have seen an example of this. I think all countries recognized 1 year ago the need to increase the Just Transition Fund, for example, and still in July.
Good morning, ladies and gentlemen. I'm placing an order to buy Swiss franc at 0.91474.
Complicated times. So finding a solution is the role of heads of states, and European Council in December will be decisive in this regard.
When you're going for a role with such profile, Minister, the OECD role, does it make you uncomfortable to see the pro-choice, to see the way that your government has handled the pro-choice demonstrations that are taking place around the subject of abortion in Poland? It seems that Poland has settled on a near total ban on abortion, ruled by Poland's top court. What would you say about that?
First of all, there is a lot going on in Polish politics, but there is a lot going on also all around the world. It's not an easy time for everybody. But I believe that within OECD, we can find a rules-based international economic order, and we can build together conditions under which the recovery process will happen smoothly. I have been myself during my career working relentlessly to build consensus among different parties. I have been COP24 president. I have also chaired IEA ministerial 2019 meetings. And we found compromises there. And I think that this spirit of finding compromise is something that I can bring to the table at OECD. And I hope that we can all together find solutions to crucial, urgent, needed.
I opened position on Swissy at 0.91474.
Your remit, Minister, given your climate and environment, and we've talked a lot about that, but given the importance of this near total ban on abortion and the aspirations you have with the OECD, do you think Poland should stand by this near total ban on abortion, or should back away from it?
My role in the government is to assure a smooth and socially accepted transition. And this is the first ever created Ministry of Climate here in Poland. And I have presented for the first time an unprecedented also energy policy, which foresees that within the next 20 years we will build a new zero-emission energy system. That's an endeavor in itself. That's a huge task. That's a huge challenge which I'm facing and that I'm driving right now here in Poland. And of course, there are all issues of politics which you mentioned, which are around. But nevertheless, we have to also make sure that we are able to advance as the international community, as OECD, as European Union. And that is my job, and these are my strengths.
Okay, Michał, thank you very much. Yes, and we've certainly heard a lot from you around the climate agenda. Thank you very much for bringing us your thoughts on that. Michał Korteka, who is Poland's Minister of Climate and Environment and also wants to lead the OECD, of course, which is why I had a slightly more wide-ranging conversation with him there. We'll be speaking to the current Secretary-General of the OECD, Angel Gurria, shortly here on Bloomberg TV. Don't miss that conversation at 9:30 a.m. UK time. Coming up on the programme, no silver bullets. The world's leading central bankers warn a vaccine won't solve the economic woes caused by the coronavirus. This is Bloomberg.
Well, as you can see, I'm placing stop on profit for Swiss franc at 0.91494.
Welcome back to the European Market Open. 55 minutes into your European trading session, and this is where we are. European equity markets on the back foot. US futures increasingly positive. Part of the underperformance in London driven by some strength in the pound attached to comings and goings at number 10 Downing Street. Interesting piece from my colleague Richard Jones on the Bloomberg. He's talking about how some of the selling of havens, the likes of the yen and the Swiss francs, some of that could be premature. And given we've been talking a lot over the last 24 hours or so about the extent to which we might need to see virus-fighting measures in the United States, worth certainly bearing in mind where havens have been going this week and indeed where they continue to go through the winter. That is it for the European Market Open. Stay with Bloomberg TV. Up next, you'll have surveillance. So we'll be speaking, as I mentioned, to the current Secretary General of the OECD, Angel Gurria. He'll be appearing on Bloomberg TV. Don't miss that conversation at 9:30 a.m. UK time. 15 years in the job. 15 years he's been talking about economic cooperation and development and commitment to democracy. We'll see what he thinks about his successor. This is Bloomberg.
President Trump bans investments in firms controlled by China military. He calls them a national security threat. Beijing congratulates President-elect Biden on his election victory. The pandemic grows in the U.S. California joins Texas in reaching 1 million infections. The CDC says almost no part of the country has a virus under control. And Dominic Cummings is going. Boris Johnson's powerful aide will depart Downing Street. Another round of Brexit talks is likely to end today with little progress. Well, good morning, everyone, and welcome to Bloomberg Surveillance. I'm Francine Lacqua here in London. The focus firmly on the U.S., not only because of the infections, but, of course, because of the transition period and what we could expect over the weekend. Now, the market's looking at the number of infections, also looking at some of the caution we heard from central banks saying, look, the vaccine is not going to be a cure-all. If you look at, what investors are trying to assess, it's, of course, the prospects for additional government stimulus to help economies that have been battered by these coronavirus cases that just keep on going up and up. Treasuries also adding to some of the gains. And then if you look at some of the other things that we're watching out for, the pound edging higher after a report that Dominic Cummings will leave his role as the top aide to Boris Johnson. That would be by the end of the year. Now let's get straight to the Bloomberg. First Word News, here's Laura Wright. Hi, Laura.
Good morning, Francine. The world's top central bankers are warning the prospect of a vaccine isn't enough to end the economic challenges of the pandemic. Fed Chair Jerome Powell, ECB President Christine Lagarde and Bank of England Governor Andrew Bailey used a virtual conference to highlight the risks. Powell says the post-pandemic economy will be different in fundamental ways. State and federal officials say the 2020 election was the most secure in American history. They see no evidence of deleted or lost votes or that the election was compromised in any way. It comes as President Trump and his allies continue to make unfounded claims of fraud. Poland is joining Hungary in threatening to veto the EU's recovery fund. That's over the bloc's efforts to make sure funds only go to countries that uphold the rule of law. The EU needs unanimous approval to borrow for the stimulus package. If they manage to block the budget, Poland would lose about 23 billion euros. Hungary would lose about 6 billion. Prime Minister Boris Johnson's top aide, Dominic Cummings, is quitting. Sources tell Bloomberg he'll leave by the end of the year. He's the second key advisor to leave amid tensions over how the Prime Minister's inner circle operates. Cummings has long been a controversial figure in British politics. He was the mastermind of the Leave campaign in the Brexit referendum. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Francine.
Laura, thank you so much. Now, the U.S. is banning investments in firms it says are owned or controlled by the Chinese military. It's President Trump's latest bid to add pressure on Beijing over what he describes as abusive business practices. Now, relations between the U.S. and China have deteriorated, with the president vowing to punish Beijing over the coronavirus pandemic. Let's get straight to Enda Curran, Bloomberg Chief Asia Economics Correspondent. Enda, great to have you on a day like today. What's the significance of Trump's comments here?
Well, good morning, Francine. It does suggest that the current administration hasn't yet finished with its aggressive stance towards China. The executive order overnight said that China is increasingly exploiting American capital to develop its own military. And the order prohibits investment firms and pension funds from buying and selling shares in 20 Chinese companies that the Pentagon has considered to have military ties. And we saw a reaction in the markets today. We saw the shares of top Chinese firms, including China Mobile and China Telecom, sell off. China Mobile has dropped 6.3% in Hong Kong. That was the biggest intraday loss in almost 6 months. And some analysts said that China has options, of course, of its own to respond, but at the moment it appears to be playing something of a lie-low approach until the transition and President-elect Biden takes over.
And what's the significance of China today finally acknowledging that actually Biden won the U.S. presidential election?
Well, it's interesting because initially China was quite muted in its reaction, Francine. Early in the week, they weren't saying very much on it at all, other than that they had been observing the election like everyone else. And now, as you say, today they have come out and been quite direct. The Foreign Ministry spokesperson at a briefing in Beijing earlier, they made the point that they respect the American people's choice and they extend the congratulations to Mr. Biden and Ms. Harris. And of course, this comes as President-elect Biden himself holds telephone conversations with leaders in this part of the world. He spoke with the leaders of Japan and South Korea and Australia this week, and now we have China publicly acknowledging his election too. I think there's a view in this part of the world that President Trump clearly remains in office till January 20th, and he hasn't finished with his China agenda. But there's a view that China might be trying to lie low in the hope that they can diffuse tensions a little bit and start something of a fresh slate with President-elect Biden. But of course, we know there's bipartisan support in the US for a more aggressive stance. So it's a question of just how China does play President Biden and whether or not they can succeed in defusing some of the tensions that have played out over the last few years.
Thank you so much. Enda Curran there, Bloomberg Chief Asia Economics Correspondent. Now, coming up, COVID's latest wave continues to swell, with infections far surpassing official levels last winter and spring. But there are still glimmers of hope. We'll look at the latest European figures and speak to Italy's Deputy Health Minister. That's coming up shortly. And this is Bloomberg.
It is critically important that the markets stay open in this time, as opposed to trying to take breaks in the middle. I think that that'll just push off the situation a little bit, but actually could create other pent-up issues if you do close the markets.
Economics, finance, politics. This is Bloomberg Surveillance. I'm Francine Lacquet here in London. Let's go back to the markets and to investments. Stephen Bird, Standard Life Aberdeen's chief executive, says this is absolutely the time to show that active investing performs well. Well, he spoke to Bloomberg exclusively.
We've got Brexit uncertainty. We've got rising case numbers in COVID. But we know more this week, certainly, than we knew last week. We now know that there is a successful vaccine for this pandemic. And we also got significant clues as to how the market reacts to that news. You know, there was a short sort of flurry back into value stocks. There was a significant optimism, albeit beginning to fade right now. But if you cast your mind past this difficult short term, this quarter, and we see the vaccine being distributed successfully, then I think, and we see the transition of power in the US, I think what you're going to see is Biden is certainly going to be spending money. We think there's going to be fiscal stimulus. We do think that in the longer term, there's going to be a weaker dollar. That's going to be good for emerging markets. 85% of the time that has been the case. So we think that if you look past the short term, you can still have, there's a risk-on environment, central bank support, ample liquidity, and the search for yield. We're in a world of low numbers. So given that context, there's never really been a better time to be an investment manager, because uncertainty is high and the need for guidance is high. But that's if you think about this year in the UK, 20% down in Q2, 15% up in Q3. But now a sort of difficult Q4. I think you really have got to, hold your nerve and see past the difficulty and maintain a risk-on environment, and that's certainly what we're doing.
Stephen, why is active having such a tough time? I would have thought if ever there was an environment in which active would be doing better, it would be now.
That's actually the case, Guy. Totally agree. In fact, 70% of our active equities are actually ahead of benchmark. I think a lot of this gets cast. I mean, I'm only here 2 months, so a lot of the credit for turning around the investment performance clearly goes to my predecessor. But as I sit with our fund managers and we go through the performance today, we've been seeing improving performance, and as a consequence, decreasing outflows from the business. We were about flat at the half year as we reported. So this is the time. My message to our team is this is absolutely the time to be able to show that active performs and can outperform simply index tracking.
Well, that was Stephen Bird, Standard Life Aberdeen's Chief Executive Officer. Now, as countries around Europe are dealing and reeling with the cases of ever more coronavirus, more people and more are infected, what does that mean for lockdowns and how politicians around Europe should deal with it? Well, I'm delighted to be joined right now by Pierpaolo Sileri. He's the Italian Deputy Health Minister. Deputy Health Minister, thank you for joining us. This is a crucial time because we get into the winter months and actually could make it much more difficult to contain lockdowns. How do you see this developing? Are we going to see a national lockdown in Italy, or will it be more regional lockdowns in and out?
I don't think we are going to meet a national lockdown, but I believe that the local lockdown we are performing now, starting the beginning of November with some regions, I think we will work. Obviously, we need to wait 2 weeks to see the results. So we did divide Italy in regions that are controlled every week. So we do check the ability to trace the virus in the territory up to the number of the beds that are used in ICU care. And according to 21 parameters, we are able to say if there is a high risk of progression or lower risk. Thus, we give a color to these regions, and if it's a red region, then these regions has a lockdown that is less severe compared to the lockdown we experienced at first in Europe in March. So according to this, right now we have several regions that are red. Some others are orange, and the others are yellow. Yeah. The yellow regions have the light risk, and the red has the more severe risk. So I don't think we will see 21 regions red. Yeah.
Are there any regions that could actually change in the next couple of days? What would happen to the Lombardy region? What are you seeing right now in the case numbers that could give us an indication of what next week will bring?
Lombardy became red last week, so according to the rule, they will remain red for the next week. At the end of the next week, we'll check the numbers, and if the numbers are going down, then obviously the region will turn to be orange, or why not, I hope, yellow, but we need to wait 1 more week. Obviously, when you become red or orange, you need to wait 2 weeks for check again the number, and then if the numbers goes better, then you'll be back to another color. So before 1 week, I think will be very difficult to say if it's working or not. I can tell you that some friends, some doctors in Lombardy are telling me that they are seeing less people going to the hospital, and probably things are going better, but it's a perception of some hospital. We need to check the general number of the entire region.
Deputy Minister, how likely is it that the current decree for these regional lockdowns that is meant to last until December 3rd will continue beyond that and even well beyond that?
Obviously, yes, if it works, I mean, if we can prove that this regional and surgical local lockdowns works, then obviously they will go ahead, even because we need to fight against this virus for the next 6-7 months. So I believe it's much better if you close a region and you perform a local lockdown that maybe in 2 weeks you can remove than the entire national lockdown.
Give me a sense, Deputy Minister, of what Italy right now needs given these regional lockdowns. How much more support do companies need, and how quickly do Italians need access to a vaccine?
So, first of all, the government is helping the economic COVID, because right now we have a health COVID that, you know, the national health system is under pressure, but we have also an economic COVID. So we are providing direct compensation for companies and people that they need help, obviously. Regarding the vaccine, you know, I think the vaccine will be ready at the beginning of the next year, but I cannot give you a date because we need to wait for the official authorization. So after that, according to the type of the vaccine, we will be able to have available the vaccine, and we will start with the fragile people and the health workers with the vaccination. So probably this will happen during the first trimester or quadrimester of the 2021.
What's the biggest challenge, Deputy Minister, in getting the vaccines to all the right people? Is it refrigeration? When will you be satisfied that you'll be able to roll out the vaccine to all Italians that want it? How long will that take?
I think it depends from the vaccine, because everyone now is talking about the needs of refrigeration -60 for Pfizer vaccine, but not all the vaccines, they need refrigeration at that type. Anyway, I think we are ready, and the Minister of Health is already working with a group, and we have already a plan that is not different from the plan that every year we use for the flu vaccination. Probably Minister, we will need 4 to 6 weeks. 4 to 6 months.
And I just want to make sure that I understand, Deputy Minister, that you're not ruling out the extension of the decree for these lockdowns past December 3rd.
Oh, I think we will go ahead with that after December the 3rd. As I told you, we need to monitor these regions, and as I think the exposition to the virus will decrease, we will observe better numbers, I hope, in these regions. So I do see an extension of that for the entire winter. Obviously, this will avoid a national lockdown.
Thank you so much for joining us, Pierpaolo Sileri, their Italian Deputy Health Minister, joining us this morning on a very important update, of course, on what's happening in Italy. Now, coming up, a happier place. Disney shares gained after streaming subscribers jumped the last quarter. I know my household probably contributed to that significantly. That's coming up next, and this is Bloomberg. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Now let's get to one of our top stories. And Disney jumped in late trading as it reported a smaller than expected fourth quarter loss. Now the star was Disney Plus, smashing subscriber estimates. Now for more on this, let's get straight to Alex Webb, our Bloomberg opinion columnist who joins us now. Alex, first of all, can Disney Plus take away Netflix dominance of the streaming market?
I think that might be the wrong way to look at it, actually. That there is space absolutely for more than one streaming player here. The question is which 2, 3, maybe even 4 streaming services are a household likely to pick. And it certainly looks as though Disney Plus is one of them. I think particularly for households with children. They've racked up fairly staggering numbers, 74 million subscribers inside just a year. I think it took Netflix something like 8 years to reach a similar amount, although, of course, we're in a very different environment. So investors are very excited about it, understandably.
Okay, so is it war of content? What can Disney Plus now do to become more, better and more viewed than Netflix?
I think that there's a question here of sustainability, that in terms of whether it can sustain the valuation, Disney can sustain the valuation that it has, and to do that, it needs to sustain the same pace of growth. To do that, it really needs to think about investing more in original content. At the moment, we've got, sort of every Disney film dating back since its creation on Disney Plus. We don't have many original shows. The only one really is The Mandalorian, which has been a hit, but one show isn't necessarily enough to keep attracting new subscribers. So the question is to what extent they invest heavily in new original content, whether they lean more heavily towards Disney Plus and away from theaters, which would of course be a dreadful shame for theaters, but is something that investors, particularly the activist Dan Loeb, who has taken a stake in Disney, seems to be agitating for. And that is, I think, going to be the really crucial trend over the next year or so.
How are the theme parks doing?
Not well, and for fairly understandable reasons. It's been a huge hit to the number of people that are able to go. They say at the moment they're running at 35% capacity. I would question whether even that is wise, given the surge in cases that we're seeing, particularly in the US. But frankly, investors don't seem to be worrying about that too much. Tara LaChapelle, our Bloomberg opinion colleague in the US, has written a very good column saying that when Disney Plus was launched, it was exactly that. It was an addition to the rest of Disney. That perception is being flipped on its head, that increasingly Disney Plus is the core business and everything else comes on top of that. And investors certainly are rewarding it for that trend.
Alex, if you look at the streaming services out there, there's Amazon. Is there a space for, a fourth one? Are we going to see anything from China coming in?
We have seen so many services launching, particularly in the US, that haven't even arrived in Europe yet. You've got Peacock, which is the Comcast, NBC Universal product. We've got HBO Max, which is the Warner Media product. Disney is going to be, it has Hulu in the US, which is more sort of adult-focused content. Just for grown-ups, not explicit content. And they're going to be launching a more sort of, grown-up content-focused platform in Europe as well. That could have some sort of discount if you get Disney Plus, and I think it's going to be called Stars or something. If those things are coming, and I think there is audience for a lot of them. In the UK, of course, we have Now TV, which is very successful. There is space for a lot of these platforms. The question is who can get the Amazon or Netflix style dominance.
Alex, thanks so much. Alex Webb there, our Bloomberg opinion columnist. Coming up, joining us on the final day of the Paris Peace Forum, we speak to Angel Gurria of the OECD. This is Bloomberg. another day of risk off across the financial markets, we bring you special coverage of all the price action and implications here on Bloomberg Television.
I was actually poor.
No foreplay?
Eat your bag of Lay's with a smile on your face.
If all the diseases have been taken, I'll take a tax.
Economics, finance, politics. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Now let's get straight to the Bloomberg First Word News. Here's Laura Wright. Hi, Laura.
Thanks, Francine. The US is banning investments in firms it says are owned or controlled by the Chinese military. It's President Trump's latest bid to add pressure on Beijing over what he describes as abusive business practices. Relations between the US and China have deteriorated, with the president vowing to punish Beijing over the coronavirus